You're listening to the WBT Podcast with Michael Lodge. Listen to all of our podcasts at www.wbtpod.com. Stay informed. Let's get started.
And welcome to the WBT. This is Michael Lodge. Another day, another dollar. $1.82. Conversation today is going to be about what businesses, small businesses, may be losing or may not be looking out for on their tax returns. I'll be right back.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
So, there are businesses who are just starting up, and you know who you are. And a lot of you miss out on a lot of deductions that you should be taking. And it's for a variety of reasons. And we're going to go over some of those reasons today, or tonight, or morning, wherever you may be listening to this, because I'm heard all around this great world of ours. And the problem is that when you're starting up a new business, what do you focus on? You focus on building a business. But all the administrative side and all of the tax side and accounting side, it kind of goes to the wayside because you're not paying attention. Because you're so busy focused on building something. Part of building something also has to do with how you're managing everything so that you are complying, that you are taking care of the right tax situations, and that you are documenting everything that you do. So let's talk about some of those items that startups and small businesses fail to do. One is when you're starting up a new business, sometimes you're writing off all of your startup expenses at one time. If you're launching a new business, you're probably tracking every penny. I know, because when I started, I was tracking every single penny. Well, I'm still tracking every single penny. So you're tracking every single penny you spend in order to write it all off, and at the end of the year. You think you can just write everything that you've done at the end of the year. Before you get too excited at the thought of those tax savings, think about the limitations the IRS has set. They have limitations for initial startup cost deductions. According to the Internal Revenue Service Publication 535, Chapter 7 and 8, did you write that down? If you're looking for the specifics, okay, write those numbers down. Publication 535, Chapters 7 and 8. You can only deduct up to $5,000 in the first year. Everything beyond that must be amortized over a 180-month period of time, which means that you're taking, let's say you had spent $10,000, you take $5,000 in 2019, and then you spread it over the remainder over the 180-month period of time. Kind of like depreciation. If you know anything about depreciation, well, amortization is about the same concept. Okay? Although you can't skirt IRS rules, you can maximize your deductions right off the full $5,000, if at all possible, right off the full $5,000, and ask your accountant to help you spread out the rest. The other thing, and I see this so much, it happens every single time a new client comes in that's starting up a new business, and it's called documentation. Failing to keep good records can cost you a lot of tax money. When there are customers waiting, it can be tough to make time to record every single bill, paycheck, receipt, or invoice that crosses your desk or your wherever you're standing. But if you don't have proof of your expenses, you won't have proof of the deduction you deserve. That's why you document everything. Even if you have to throw it in a bag, not in a bag, don't do it in a bag, because I hate to get bags, I hate to get shoe boxes. But put it in an envelope, mark it on the date, and just mark down. To have someone sit down there and list out all the expenses and the receipt number that goes with it. Very simple process. Be proactive. Use a digital accounting tool to help you and your staff keep track. Look for one that can autofill expenses from images you upload and store your data in the cloud. I tell you, that has saved me so much time, especially in preparing taxes. Now, with the high technology that we have, when people send in their W-2s, I send them a link, they upload their W-2s, and it gets populated into my tax return. So does these apps too. It will populate it wherever you want it to go. If it goes to gas, it goes to gas. If it goes to repair work on the car, it goes to repair work. Get one of those apps. They're online everywhere. You have to pay a little bit a month, but it's worth it. And all of your documentation is stored. Receipts fade. Have you ever opened up and said, "Oh my gosh, I lost this receipt"? And you go out to the car, it's in the seat of your car, but it's all faded and you have no idea what it's for? When you automatically scan it in, it's there and it's documented. It doesn't fade. One particularly important expense to get right, payroll, which is the single largest expense when entrepreneurs face. According to research by payroll and HR platform OnPay, just 25% of small business owners feel confident they deduct and submit payroll taxes accurately. When in doubt, ask an accountant or hire an non-HR, but a payroll service to do it. They're cheap out there, and don't wait until tax time to do it. Record it, even if you have to record it on a monthly basis, or if you have recorded on a quarterly basis, or just start documenting everything. It is important. One of the other things is abusing tax forms. Just because you can use a form to help your tax situation doesn't mean you should. For instance, I'll give you an example. You should file Form 5213 to ask that the IRS delay its decision as to whether a hobby-level business should be treated as a traditional for-profit company. Although Form 5213 can buy you a 5-year buffer of time during which you don't have to worry about being audited, it isn't a get-out-of-jail-free card, okay? Often, at the end of the period, the IRS will review the account, including a backward glance to see how you operated over the tax hiatus that you got. So, 5213 is really asking the Internal Revenue Service to give you an opinion whether or not if you're a hobby, and I've talked about hobby businesses out there, if you're a hobby or if you're an actual for-profit company. Now, I've told you before, if you're a hobby business, and if you reported on the Schedule C as an example for business or profession, but you keep losing year after year after year, the IRS is going to go back and say, you know what, you're really not serious about running a business. You've operated a loss for 5 years now. It's time that I reclassify you as a hobby and you lose those deductions. So be very careful about that. The other issue is that a lot of you, I'm not going to point you out by name, but listen to me very carefully. A lot of you are bending deduction rules. The concept of deductions can be intoxicating. It's like an addiction. Just like when you had on Schedule A for itemized deductions, you had all of those all of those employee business expenses, those lunches, those gifts, those uniforms, those uniform shoes, the CPE credit. It became a deduction because you knew you could use it. It's gone away now. You don't have any of that. But it becomes this deduction, and you got to be careful that you're not abusing the other tax deduction rules that you're allowed, but within the law, to be in compliance with the tax law. You have to be very, very careful about that. A good example. You're filing the Schedule C for business or profession. You have all of your 1099 income that comes in, and you might have some cash that comes in, but you don't report it. Listen, the IRS catches up with that, because if they audit you, they're going to pull the bank statements for that year. They see cash going in, and if you can't prove that it was a loan from you, it's counted as income, and it's penalties and interest on underreporting your income. And then there's, while meals and entertainment related to work can be written off on your Schedule C, only 50% of the expenses can be actually deducted. So remember, if you've spent $5,000 for the whole year on meals and entertainment, strike out the entertainment portion, because that's no longer, it's only meals. So 50%. So you only get $2,500. Don't overdo it, okay? And on your on your auto expenses, you've got to make sure that you're taking the correct mileage. 50% of the expenses can actually be deducted on your meals. Mileage deductions are another common area of confusion, and it gets confusing, I tell you. While the general rate stood at 58 cents per mile in 2019, there were exceptions to that rule. Only 20 cents could be deducted per mile if you were using an automobile for certain medical care, or as part of the move that was otherwise deductible. The maximum deduction for the year couldn't exceed $50,400, including all trucks and vans. Don't bank on certain deductions or tax maneuvers to keep you in the black. And don't wait until March to review your records. Be prepared. Be thorough. Keep them in a place where you know where they're at. Be organized. Get an app so you're uploading all of these receipts and everything into the app, and it's automatically being populated into your income and expense portion of the app. The better organized you are, the better the chance that you have to beat any audit. If you can be organized and you can show the justification of that expense, and that it's a legitimate expense, especially if you are a business or profession, Schedule C, income and expenses. If you can justify it, and if it is 100% for your business, document it. Because that is how you get yourself out of an IRS audit, out of the trouble. I've seen some clients who are really good at documenting everything, and I give them gold stars every time that I see them. I'm so happy. But there's also the individual who, when you ask them, okay, how much you spend in office supplies, and they look up into the sky to grab a number, and it's usually a really good number too, because when you look up into the sky, you can see golden stars to use. Be careful. Use the correct method. Document. Don't over-exaggerate, because then that will come back to bite you, and you will be crying. And you're not going to be crying all the way to the bank with money. You're going to be taking money out to pay those penalties and interest. If you have any questions, send me a text. Send it to 818-252-5682, 818-252-5682, and I'll try and answer any question that you may have. And I promise I just won't make it up. I'll give you where to go to look for it also. By the way, yesterday, California had an AB5 rally, and it was big time at the state capitol. Assembly people were there, senators were there, fighting to overturn this AB5 independent contractor rule that includes everybody on this rule, and now it's in flux because everybody's trying to fight it. And it should be fought because what it does, California Assemblywoman Lorraine Gonzalez, San Diego, mean lady, is trying to take independent contractors who work out of their houses, who show that they are conducting business, who are filing a Schedule C, or sometimes they even have LLCs, and they may be working in healthcare, they may be driving truck, they may be writing documentaries, they may be a hairstylist. State of California wants to turn everybody into a W-2 employee. And here people are trying to create a business for themselves, and now the state of California says, no, we need your tax dollars. We're hungry, we're thirsty for tax dollars, so we're coming after you, small business guy. And that's basically what they're doing. So there was a huge rally yesterday in Sacramento. Now, in Sacramento is where all of the liberal loonies are. So you've got to realize that trying to overturn a loony bin bill as AB5 is going to be difficult. But it can be done. But it can only be done is if you, as members of the state of California, stand up and fight legislators. Remember, the legislators are supposed to represent you and protect you, not attack you and try to get more tax money out of you. So California has become this liberal state, this sanctuary liberal state. I think all the liberals are in California and New York. But here they sit, trying to push health care for everyone, protecting the sanctuary cities, and now they're going after the small business guy. It's ridiculous. It's a stupid bill. And so I have been this day and all over the weekend and last week, I have been spending so much time talking to legislators, trying to get them to do something. Now, Melissa Mendez, who is an assemblywoman in California, great assemblywoman. I mean, she will stand up on the floor of the assembly and literally tear into them for what they're doing. She has a bill that will turn it over. In other words, dismiss it, because it is so badly written that it hurts so many different people in small business in California. There's another, by the way, I think that's SB 1929. Then there's 1925, which is written by another assembly person that will address small businesses. 100 employees and downward would be considered a small business in California. And that will exempt a lot of different things that AB5 currently hits them on in taxes, and allowing them to have independent contractors. Whoever came up with this idea that independent contractors are bad, whoever came up with the idea that starting your own business and trying to survive and trying to make money and trying to do what people should do, and that is strive to do great things. Well, California says, we don't want you to strive anymore. We just want you to pay the taxes. We don't want you to try to open up new businesses or keep your business going. Instead, we want you to pay more taxes. That is the whole philosophy in the state of California, is tax until you have no more blood left in you. And that's the issue that every person that lives in California has to live with, is how much balls do you have to get up and fight the state assembly or to fight the governor or to fight the state senate. If you don't get up and let your voice be heard and start pounding on tables, you're going to get more and more taxation. You're going to have more and more regulations until you can't breathe. You're going to be squeezed until you're choking. And you're just about at that point now where you're attacking small businesses in the state of California. So I really want you to think about that, because California is a great state. I was born there, but I had to move out because they had become so socialist. And that I didn't want to be in a state was going to hurt me, so I moved to a state that is friendly. Now, if I could move back to California, I might. If they could clean up their act, and if you guys have a little balls to stand up for your state, do it. I thought I was getting away from California, but I have been fighting for my clients in California, all the way in Palm Beach. I have been on the phone, I've been on Twitter, I've been on emails, I've been doing every single thing that I can to get AB 5 overturned. So listen, if you have any questions or comments, send me a text at 818-252-5682, and I will be loving to answer your text. Bye-bye.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website at www.wbtpod.com and listen to all of our podcasts and read our blogs.
This podcast has been produced by Michael Lodge, fully focused on content.